Hey, gang, I want to jump in with a few thoughts about what happened in the markets on Friday. For those of you who don't know, I used to be a professional financial markets trader. I was on the options exchange floor in Chicago for quite a few years, traded some other things as well, traded in Europe as well. But I've been following money and markets and economics for, gosh, about 40 years now. And it was a very interesting day on Friday. Now, I kind of thought we were going to see some selling in the NASDAQ, and I'm going to go through a few different factors here, but a thing that's just very particular to right now is that SpaceX is going to have their IPO. We think it's this coming week. They're going to raise about $75 billion to value the company itself at about $1.77 trillion. I think it's probably overpriced, but I could be wrong. Who knows? I've been wrong a lot. Anyway, my point is, for all these investors, whether they are individuals or big firms who are going to buy into this IPO, most of them don't have that kind of cash sitting on the sidelines. So they have to go sell other things in order to buy that. And the kind of person, the kind of investor, the kind of firm that's going to buy SpaceX is probably a technology investor. And so that's why I've been thinking there would be some selling in the NASDAQ more than in other parts of the market in order to fund purchases of that particular IPO. Also, we learned on Friday that the S&P or that S&P will not streamline their process to allow SpaceX into the S&P 500 faster than their ordinary process, even though, on the surface, by all measures, it looks like it probably would qualify, although it does run losses, which is an interesting thing for a $1.77 trillion company. It's not profitable. Anyway, so there's that. The other thing that happened on Friday, and I'm going to put together a few factors, and there's no way to know which is most important. And maybe these things aren't even factors at all. I'm guessing, right? One of the things, though, is the market has been up pretty much since the end of the first week of May. And actually up before that as well. The first week of May wasn't great. But anyway, it's been just up, up, up. And there's been, a lot of opportunity here for profit taking, a lot of big gains. The other thing, though, that I think was a major trigger on Friday was the jobs report. It's not just that the number of jobs created in the month of May was somewhere around double the economist estimates, right? Like around 170,000 versus 80 something thousand estimate, but also the April jobs number, and this didn't get much attention, but the April jobs number was revised way up. And I don't have the numbers in front of me, but kind of like what happened with the May jobs number being much higher than estimated. So when you look at a hot jobs market and inflation that continues to be pretty steady because of the Iran war and because of President Trump's tariffs, and for whatever other reasons you might have inflation, too much money in the economy, you got all these things that now has the market thinking, well, a year ago, or let's say less than a year, 6 months ago, the market was thinking we're going to have a rate cut coming soon. Then the war hits and people think, all right, the Fed's going to be on hold now. Now you see these jobs numbers, and now people are thinking that the Fed's next move might need to be a rate hike. Now, let me just say, I think that would be a big mistake. I don't think that the Fed can defeat inflation that is caused by a spike in oil prices by raising interest rates. I think it would be a big mistake, and I don't think they should do it, and I actually don't think they will do it. I think they will try to wait through the war and see what happens. Still, because this gets a little technical now, but because the NASDAQ has a lot of growth stocks, companies that are expected to generate a lot of earnings in the future, but maybe not as much now as compared to some of the larger industrial stocks that might be in the Dow or in the S&P, which has both. But when you have earnings that are supposed to be well out in the future, then an increase in interest rates harms the present value of those stocks by more than it harms the value of stocks that are producing a lot of earnings now. I won't get into all of that. But as the market starts thinking, hey, there might be a Fed rate hike, you would always expect that to hurt the NASDAQ more than it hurts the S&P or the Dow. So the Dow, we saw down something a little over 1.33% on Friday. The S&P was around 2.5%, and the NASDAQ was down almost 5%. Here's the other thing I note, and this probably doesn't mean very much to investors, maybe more to traders, is that after stocks closed at 2 p.m. Mountain Time on Friday, futures got crushed. So if the stocks had still been open, the Dow, instead of being down 700, a little less than 700, would have been down a little more than 800. And the NASDAQ, instead of being down 4.75%, would have been down 5.25%. And so on. The S&P futures went down another 30 points or so after the stocks closed, which is very interesting. And it shows that there was some kind of panicky selling going on at the end of the day on Friday. I see a story about the Citigroup macro analyst raising his target for the S&P 500 for the year to 8,100, anticipating big productivity gains and profit gains from AI. And I haven't read the whole report, but a lot of the thinking about AI profits has to do with the profits to AI companies, the profits to NVIDIA, and the profits to companies that build data centers. But remember that as companies get better at using AI, you should see lots and lots of companies of all types get more productive, be able to do more with less, be able to make better decisions, be more efficient, and generate higher levels of profit. So when you think about AI, you got to think not just about the people producing it, but also the people consuming it. Anyway, this Citicorp guy, I guess, is raising his estimate, which was interesting to see after a day like that. I have no prediction what's coming next. All these things do make sense to me. Profit taking. I've been telling my radio show listeners to expect selling in technology stocks going into the SpaceX IPO. And then that very strong jobs number has the market worried about interest rates. So that's what happened on Friday. I have no idea whether that presages a huge sell-off on Monday or just the market taking a little time to digest. A Friday, as we're getting into the school holidays and so on, you might have traders vacationing, not as much as in July, but could get a pretty thin market, which allows moves to be exaggerated. Maybe that happened a little bit on Friday. In any case, I just wanted to take a couple moments and kind of explain to you what I think happened. I hope you found it useful and interesting.